What's up, everyone? We're going to be doing a trade recap of the trade that I took yesterday, which pushed me just over enough to take out a $780 payout. This is my first payout ever, first payout of the new year. I'm really happy and excited to see what the future holds, but it just shows that it's been 2 years, this journey of trying to get a payout, and it's paying off, which is an amazing thing to see, and how it's growing, how this channel is growing, how trading overall, my system, psychology, everything that goes along with trading is overall growing in a positive direction. I'm very content with it, and I want more, and I want to keep pushing for more and more payouts. And that's what I want this year to really focus on for trading. Is more payouts, keep pushing, make money, etc. In today's video, we're going to be going over my trade recap of the trade that I took yesterday, as well as the one I took today. Overall, my idea behind it, I did post a YouTube short highlighting and recorded the entire trade live. I'm going to go from a higher time frame to a lower time frame, indicating key levels, what I was looking for, why it was good. Then I'll also go into during the trade how I felt, how I managed the trade, etc. Very content to see this. I did submit it last night, and then I'm still waiting for the funds to be sent. Overall, really good to see. So yeah, let's get right into it. So yeah, over here, monthly P&L, we're up 600. We can see on week 4, we're up 366. Yesterday, we had a $592 win with a today a $70 loss. I'm going to be going into the $70 loss as well as the $592 win. I'll start with the larger win. Overall, I just want to emphasize that I risk 150 and attempt to make 2R, 3R, and this was a 3.5R trade, the one from yesterday. So that's really good. I'm very content with that. Overall, the trade was managed well. I wish I could add on more positions, but yeah, I think it was overall beneficial. I'm very content with it overall. So yeah, let's get right into the charts. So this is today's trading, and we're going to be going over yesterday's trading, which is this one over here. Once again, I was overall bullish. All right, let me just get... Okay, so coming into yesterday, I'm overall bullish. I already highlighted in my Sunday analysis. I'm bullish for the week, aiming for these relative highighs. If you want to go watch the video, go watch the video on why I am bullish. Overall, in a nutshell, we're inside of this breaker block as well as this order block that already had a reaction off of it. And then now we can see how we're coming back into it. We had this large new week opening gap. There's a liquidity void in here and liquidity residing above. It's very obvious that price action wants to rally higher. So when I saw Wednesday open turtle soup this low inside of a discount array, I was really content with that overall idea, and I want to see price action rally higher to the new week opening gap high, and etc. So that's what happened on Wednesday. Now Thursday, same thing. I'm overall bullish, aiming for what? For us to fill the rest of this new week opening gap in, as well as target the 0.5 of this 1 day wick. Why did I highlight the 0.5? Because when we have really large wicks, we always want to pay attention to the 0.5 of it, because it's an area of interest, and it's you have to think of it like a fair value gap. When we have a large fair value gap, we want to rate into quadrants, and we can see how in this large fair value gap we have so much price action can do inside of here. So then let's break it down so then we can see what price action does at each key level. So you can see how price action does with respect to 0.5 here, and that overall is an indicator of bullishness. Bodies are stopping there, and we create the swing low with the bodies. Okay, now we can expect this candle, this candle, this candle to possibly be bullish, aiming for what? These highs. And the same premise goes for this over here. So 1 day, I'm already bullish. That's supported with the weekly analysis as well as the relative highs. Now, coming down onto the 4 hour, what I highlighted earlier was that we have these relative lows, turtle soup, strong close higher, perfect indicator of being bullish. We have this order block, which is used here, and then strong rally higher after Trump decided not to put tariffs on Europe and because of Greenland, sorry. And now we have this new day opening gap, which is a premium new week opening gap. We can see how the Asia candle, we rally lower, close higher into the volume balance over here. We overall respect it. London, we explode higher, filling in the new week opening gap. Overall, I'm just bullish, aiming for what? Relative highs. So I'm looking for bullish trades. 6 a.m., we rally lower into the open of Asia. And then we can see how the 10 a.m. opens, wicks lower, takes out the previous 4-hour candle low. We tap into, we almost tap into this volume balance, don't exactly, but tap into the Asia open. And then we see the strong rally higher past the open of this 4-hour candle and into the 0.75 of this candle's wick. So overall, I'm bullish on the 10 a.m. Why? Because I'm bullish on the higher time frame. On daily, I'm bullish. I'm looking for bullish trades. And then what I just did was I went over the 4-hour time frame, and what we did, like I'm looking back at it. So pretend 10 a.m. wasn't even there already. When I'm looking at this, okay, I'm bullish. We have this very nice wick. Oh, shoot. We have this very nice wick. I want to see if price action can respect the 0.5 of it. Additionally, we have this turtle soup over here, and we have these relative highs, which is the overall draw on liquidity. Bullish, simply put. Now we hop down onto the 1 hour. Now the 1 hour gets a little more serious. So we have Asia that opens up over here, and then we have the midnight open and rally lower into -1 standard deviation, which is coupled with the new day opening gap. Price action overall respects this very, very well. And coming into London open, we rally lower into the 0.75, -1 standard deviation side of the day opening gap, and explode higher aggressively, creating two very strong 1 hour bissies. Once again, the 1 hour bissie that I prefer to use when I was looking for a trade on this day was this 1 hour bissie right here, simply because this is the 1 hour bissie that breaks large portions of the bodies over here. And I really like that. It overall shows strength in the market. Not strength, but the algo is trying to rally higher towards these relative highs. But then also one of the most important things to understand is that when we do have a 1 hour bissie below, you still have to consider that as an area where price action can retrace into. And we see how price action has a very deep retracement once we take out these London relative highs, as well as this -3 standard deviation, which we just fall short of. But overall, why was I not bearish in this situation? Simply put, it's because on my 1 day and 1 week, I understand that this area over here can be traded into, but I'm looking for bullish trades, right? So why would I be aiming for this area? Just because of this, you're trading a model, you're trading a pattern. We're trading confluences, we're trading a system, we're reading price action. When I'm reading price action, I understand that this over here is an overall indicator that we're bullish because Asia is over here. We take out -1 standard deviation, do the opening gap, and a strong displacement higher. Where London, when we do displace higher, we have a partial London rallies higher. We can expect New York to once again rally higher and attack London high. The London high was already taken out by New York session. But overall, I'm still bullish. Regardless, I am bullish. I don't want to look for bearish trades because I'm bullish on the 1 week. So I'm going to be looking for bullish trades. And when we're inside of an array of interest, inside of a session, inside of a discount, I want to see my model form there. So then I wait for the 9:30 open. And now we hop down onto 15-minute. Now I'm paying attention to 15-minute. Do I see anything here? No, not really. Once again, good to note, relative highs, turtle soup, strong rally lower. It's a good trade right there if you want to catch that. I caught this trade. 5-minute. Do you have any confluences here? The only thing that was worth noting was during the trade, very important to note, is this 15-minute bissie over here, which is used to send price action higher. Okay, so I already have confluences on the daily because I understand we're overall bullish, and then on the 1 hour as well, we're overall bullish. And now I'm moving on to the 1 day, the 1 minute to find the trade. So 9:30, very important to understand what happens here is that when we open, we have a very, very, very large opening range gap. And when we have this opening range gap, we just completely deteriorate all of the ground that we covered. Now, that overall, to me, signals that the market is not going to rally in the desired direction as much as I initially wanted it to. Because most of it was spent balancing this opening range gap, which is a very large one. So now it has to recover ground with all of these order blocks, which can lead to choppiness. But overall, what's very important to highlight is that when we do rally higher, I think this is London, just after London at 104, we don't even take out or tap into the open of 9:30, which just shows, this is something I highlighted in my journal, is that when we are overall bullish, opening range gap is larger, and we have this 30 minutes, the first 30 minutes, strong rally lower, and we open at the bottom of the opening range gap, we should still be bullish, but we shouldn't anticipate price action to necessarily break the 930. And that was something I found really interesting. So on the opening range gap, this was not a positive indicator to be bullish. What am I saying? This strong rally lower was not a positive indicator to be bullish. And then we just hop down onto the new week opening gap now, and we see how we're overall. I think this was today's trading. We're yeah, I don't really use new week opening gap this over here, but overall we could just see how price action rallies lower. Okay. So now I just look for my model. Simply put, we have 7 o'clock liquidity, which is what 9 to 9:30. We'll aim for 9:30 to 10. We'll aim for. We're gonna aim for 7 o'clock liquidity, and we take that out. We rip that lower, and then we look for the first presented fair value gap, which is right here. Why is it not this one? Because if you go to regular trading hours, I guess I'll go to regular trading hours. If you go to regular trading hours, you see how this isn't the first presented fair value gap of regular trading hours. It's this one. But anyways, now I can see how we're trading lower. Now something that I was really content with seeing is at this swing low, which is a previous 4-hour candle inside of a 1-hour BIST as well as inside of a 1-day array, we have this extreme consolidation at the low. This is just chop, and then you can see how price action does something like this. This is a perfect example, in my book at least, to a Judas swing. We create a low, a higher high, lower low, and then a higher high. Judas swing is basically a fake, and then real. I guess that's the way that I interpret it. It's a Judas swing. It fakes you one way, it fakes you another way, and then we actually deliver the way that we're intended to go. So when I saw this, this is a unicorn model in my eyes because we have this very nice breaker block right here, which price action does use to send price action higher. And over there, we have this 1-hour BIST, which I'm going to be paying attention to. But before we do deliver this rally higher, we have this destroyer, this strong rally lower. And then when I'm here, okay, what am I paying attention to? So we're still inside of this 1-hour BIST. We're still below this turtle soup. Okay, maybe we're just tapping back into this price level. And then we're respecting the 0.69, the golden ratio. And I've seen this many times where price action does close below, but now I want to see, okay, now what does price action do? Understanding that this can become a reclaimed BIST to rally higher. And overall, what it was is, let me just go to the actual trade that I took. And overall, you can see how once we do close above this 1-hour BIST, I get in at 581.75. Just a little bit above it. And basically my idea there is, like I said, we have turtle soup, Judas, 1-minute BIST, respect of 0.69, even though we painted outside the lines a little bit. Reclaim that 1-minute BIST, which is the first fair value that formed inside of the AM Silver Bullet, which is the AM Silver Bullet. That is the AM Silver Bullet. Forget exactly how many handles ICT said, but I think it was like 50 handles it has to at least deliver, and it's going to deliver 100 handles easily. So I got in here with my stop loss just below the 0.79 level, which is what I usually do. And then we just waited. And then when price action, because once you're in the trade, you shouldn't marry the trade. You shouldn't really look at it. So sometimes in my videos, I just get up, walk around. But then once we get here, we take out this swing high. Or it might have been even before when we close above this high, I moved my stop loss to break even. And now I have nothing to lose. Obviously, this is a very large range. Like, this is what I wanted us to do, and that's almost 5R. So I'm like, okay, where's an area where I could take out at least one contract? One of the best targets to aim for, listen to me, one of the best targets to aim for if you're below it is the 930 first presented fair value. Aim for that. So when my stop loss is at break even, I'm like, okay, how is price action trading? We're trading good, but I want to pay the trader. There's no reason you shouldn't take partials. Partials are amazing. Take partials. They're mentally good for you, and they also give you money. So why wouldn't you take partials? So I set my partial at the consequent encouragement of this 930, which is the midpoint of this 930 for value. And then when we started to reach even closer, I was like, okay, I'm a little bit more confident. I'm going to move my stop loss literally just to the 0.5 of this tail. That's it. Because we have this 1 minute BISI over here. Price action could trade all the way to the open of it, but maybe not the 0.5. And that's where I always keep my stop losses. I always keep it at the 0.5 of the tail of the candle that creates the low of the fair value. So then I'm there, and the fair value I'm referring to is this one, which is the one I originally used. And then we have this one, and then I just used the 0.5 of that. And then we can see how we have this sharp rally lower. And then you might be concerned, like, oh no. And yeah, I was like, oh no. But I trusted my stop loss. I stayed there. And then what time is the macro inside of AIM Silver Bullet transitioning to just before lunch? The 10:50 to 11:10. That's the macro. And we can see what it does here. Reversal macro. Perfect example. We rally lower. We trade. The candles. Look at the bodies respecting this 1 minute bit. This is exactly what you want to see. When I saw this, I'm like, there's no chance that we don't rally to these highs. There's no chance, and we don't rally to this 930. But we didn't rally to 930. But I already highlighted why we did it, because in regards to opening range, yeah. But overall, bullish. We respect this 1 minute BISI. I highlighted it. I loved what I saw. And then first partial out here. At the beginning of my trade, my psychology was overall, ooh, this might have been a little forced because price action was overall very tight here. It was stop loss was very tight. I'm not sure if I'm gonna really enjoy this or if price action is just gonna whip me out really quick. But I liked what I saw. There were a lot of confluences behind it. Stop loss here, sound stop loss. There's no reason for me to be nervous or anything about that. That's just human emotion getting in the way, and I shouldn't have a human emotion. That's an issue that I have. Also, something really cool that I want to note is that the 11 o'clock made this large candle after the low was at the 0.5 of this fair value. And notice how we respect that order block just before the 11 o'clock. Very nice, very clean. What you want to see. Price action just gnaws higher. First TP hit here. Stop loss doesn't move. Keep my stop loss there. Then once we close above this 930, overall, I don't really want to see price action trade below this 930. I want to see price action use that 930 to rally higher. Because then if I just see a sharp rally lower, I'm like, okay, we might use that 930 now to rally lower. So then I moved my stop loss, I think, right here. And then once I took out another partial at this high, which is the lower high or the higher high, one of the highs. And then once price action like kissed it one more time, I was like, I'm out. I'm not going to risk a $600 win for 20 bucks. And yeah, that was overall the trade. Out of the trade, I was very happy because I was able to take out my first payout. And then I just closed the charts for the rest of the day. And then we can move on to today's trade. Overall bullish, same thing, same idea. Bullish, aiming for these relative highs. We have this very nice volume balance that price action has been respecting with the tails. We have a discount new day opening gap, rally higher, creation of relative highs. We have the London rally lower, which most likely created the low day, which it did. 9 a.m. rallies to the 0.5 of that tail, rallies higher. Now I want to see 10 a.m. explode higher towards what? These relative highs. And overall, trading PM Silver Bullet, not optimal. Why? Because we already took out majority of the liquidity that I was aiming for on the Friday in the morning. So why would we even trade the PM Silver Bullet? So that's why this trade was very low probability and not an area that you should take a trade in. Next week, this will be a very nice area where we can take out these lows and then rally higher. But right now, it's not something you don't want to trade this. But I did. But I risked half because I got stopped the original time on my full position size. And I'm like, okay, price action, it's pretty risky. So then I risked half. after I took the payout. Okay, so now once again, new day opening gap. We have Asia over here, strong rally lower. I want to see this 1 hour inversion for value up. Respect to this 1 hour BISI that we highlighted the day prior. We see how we do respect the we close above 0.5, then we use it to rally higher, attack the high day weak consequent encouragement from one of the days over here from January 16th, and we can see how we overall use that, and then we trade back into the 1 hour BISI and open of London session. And I just wanted to see price action really higher, simply put. The area that I was overall aiming for was lunch hour highs over here. Also really cool to see how the new day opening gap at 9:30 open. These are all confluences over here, and how at lunch the confluence was midnight open, how that was used in also with the 1 hour inversion fair value up. Aim silver bullet was overall bullish, right? Very nice trade if you caught that. Overall target was this. Delete that. I was looking for a trade in the morning as well. And then over here we have this very small 15-minute volume balance, very large 15-minute SIBI, but I was overall aiming for these highs, and we see how price action just uses this 15-minute SIBI to not lower, but there's no real 15-minute fair value ups formed prior to PM silver bullet, and we just not lower. So then I hop onto the 5-minute. I don't really see anything on the 5-minute, and then once again hop down onto the 1-minute, 15-minute volume balance. We have the turtle soup, rally higher. We take out these relative highs, retracement. We use this 1-minute BISI. I get in like right here on my first initial trade, which is this one right here. And then remember my target was overall these relative highs over here from lunch, and we can see how price action just consolidates, and we have a strong rally lower, and I get stopped out. I move my stop loss to break even once we took out the swing high. Then we have the strong rally lower, turtle soup. We have a strong rally higher again. I'm like, all right, I'll enter again, half position size. I'm happy. The one thing that, looking back at this, probably something that's not really good for my psyche, is that I'm not sure if I'm running on like, because I got to pay out, I could just take trades, blah blah, etc. I don't want to trade like that. You trade with like a system, you trade like a business, and yeah, that's why having this weekend is a really good reset mentally, and like, all right, fresh slate, let's keep going. But yeah, trade was this, stop loss was below 0.79, and then we had a $70 loss. Overall, I don't recommend the trade like this. Why? Because I already highlighted that when you're, let's say, bullish on the day and it's a Friday, you've already exerted a large amount of liquidity earlier in the week with a bullish direction, such as the new week opening gap, as well as the relative highs from Asia, which we took out on Wednesday, I believe. So overall, we are taking out bullish liquidity levels, bullish arrays that that I'm interested in. And then Friday, we're also doing the same thing. But then it's like, the thing here is TJIF, thank God it's Friday, that I kind of do see what ICT talks about when he's regarding this. And how, what's TJIF? I'll show you. I'm not even sure if it does it here. I haven't checked. I'm just guessing it has. Oh, you just go like that. 0.3 and then 0.2. Oh yeah, perfectly. Oh wow. Oh, that's pretty good. But yeah, we can see how, I wonder if it's like perfect actually. Oh wow. But yeah, thank God it's Friday. Pull back on that Friday. Why the PM silver bullet is sometimes a little iffy, because we do close inside of this. Yeah, very interesting how that works. But anyways, not talk about that. And yeah, just not a really good trade to take when the morning session of the Friday of a bullish week takes out all the liquidity that you want to see, and then PM silver bullet opens, whether it opens near the high or if it's 100 handles away. Just don't trade that PM silver bullet. It's low probability, and you can see it here. This keeps happening, and I just gotta completely close the charts, and it's the reason why I took this trade, like I said, is probably because felt invincible, which is never something you want to feel like. So anyways, I hope you guys enjoyed this trade recap. Hope you guys learned something new. Hopefully we could just keep pushing. Each of us gets more and more payouts, and yeah, thank you guys. I'll talk to you guys later. See ya.